You may be wondering what this video is about and why should you watch it. In this video, I'll be sharing more about Tesla and on how and why you can potentially triple your wealth with Tesla stock by the end of 2025. I will be breaking it down with some simple fundamental and tech and valuations analysis, and I do hope that you will take away something from this video. As you might already know, Tesla's stock price has doubled since a few months ago. And the reason for this huge rally is due to Tesla signing a deal with car rental company Hertz, who promised to buy some Tesla vehicles. Here is something you might find interesting though. Despite this huge rally in price, there is actually little added benefit to Tesla's economics, and even the man himself said so. This is because Tesla's primary concern has always been trying to ramp up on its production to keep up with the demand for its vehicles. So, even though I think that Tesla is a great company, in my opinion, this rally is largely irrational. But on a side note, I think the world is also torn about its stock price. There are people who think that it's incredibly overpriced. On the other hand, there are people like this crazy man over here who plans to colonize Mars with his bunch of random companies, as well as Cathie Wood, the CEO and CIO of ARK Invest, and they believe that Tesla can hit $3,000 per share by 2025 with good execution. Perhaps you may be wondering, how is that possible? There are two major implications if this happens. Firstly, Tesla's stock price would have increased more than 3 times in around 4 years. This means that a $10,000 investment would leave you with possibly $30,000 by the end of 2025. Secondly, if this happens, this could possibly make Tesla the third largest company in the world. So, in this video, I'll break it down for you on why I think, although unlikely, it is actually quite possible for Tesla to hit a $3,000 share price by 2025. Let's start out with this. Do you know what is this? For people who may be wondering what exactly is this weird looking slide thingy, it is actually known as the S-curve. And what this graph shows is an infant industry expanding and then becoming mature. And soon enough, a new technology comes along and disrupts the previous industry, and the cycle continues. Like what you see on the right, where people used to ride in carriages, now they drive cars. Also, petrol-fueled vehicles are said to be on the verge of being disrupted by electric vehicles. Now my question to you is, at the moment, is Tesla considered to be a second generation S-curve? The answer is no. No, it's not. And here's a common misconception, right? While people might think that Tesla only sells electric cars, in fact, Tesla has multiple S-curves. Tesla is also an energy storage, AI, and robotics company. And these are all disruptors that are looking to disrupt various mature industries. And do take note that this is also crucial in helping us understand why Tesla should be valued in a different way from highly profitable, low growth companies, which I will explain later as well. But before I proceed on with the calculations, there are a few things viewers out there must know, like what is a stock? So if you buy a stock, you are essentially buying into partial ownership of a company. So obviously, you want to buy companies that become more valuable in the future, right? Next up is market cap or market capitalization. And what that basically is how much a company is worth. And it is determined by the number of shares of a company multiplied by the price of each share. Okay, and but you may then ask, but how do I know what will the price of the shares be in the future? And that's a fairly very valid question because we all want to buy shares that will go up in value. And in short, there are many methods to do so. But for today, to make things simple, I'll just be using the PS ratio. And this is determined by dividing the market cap by the annual revenue. So in this video, I'll be calculating the projected revenue of Tesla, how to value Tesla using the annual revenue and hence derive the market cap as well as stock price. If we want to find out how much money Tesla makes, we first need to know how Tesla makes money, right? So just a disclaimer, Tesla's revenue streams are not just confined to these 3 sectors, but for simplicity's sake, we'll be looking at just three of Tesla's main sectors for now: electric vehicles, energy storage, and the full self-driving software. 50%. Yes, my projected estimate for Tesla vehicle sales is a 50% compounded annual growth over the next 4 years. To know how many vehicles Tesla is going to sell by 2025, we first need to know how fast vehicle sales will grow from now. So here's the reasoning. Let's first take a look at the industry. 6.8 million electric vehicles were sold in 2020, while the average annual vehicle sales is around 80 million or so. That's more than 90% of the automobile industry that is waiting to be disrupted. I don't know about you, but it seems like the electric vehicle industry is at the bottom of the S-curve and is about to take off from here. Also, we can see from Tesla vehicle sales here that Tesla has been delivering at close to a 50% growth in vehicle deliveries annually. And so if this keeps up, Tesla will be delivering around 4 million vehicles in 2025. What this means is that by the end of 2025, 5% of all vehicles will be a Tesla. And I do think that it's quite believable given that Tesla is in the midst of building 2 new factories and releasing 3 new vehicle models. Also, Tesla has a long-standing issue with keeping up with the demand for Tesla vehicles. Imagine that, right? So the faster Tesla is able to ramp up its supply chain, the more cars they will be able to sell. Now we know how many vehicles will Tesla sell by 2025. We also need to know how much Tesla will make from selling each car. All right. From the last 4 quarter sales, we can see that the Tesla Model 3 takes up around 50 to 70% of the total number of Tesla vehicles sold. And the sales for Model S and Model X are pretty insignificant. So for simplicity's sake, we will use 70% of the vehicle sales in 2025, and we assume that it's Model 3, and 30% of it will be Model Y. And a quick calculation here, and we have, voila, we have about $183.4 billion of revenue from electric vehicles. But since this is a conservative calculation, we would expect the revenue to actually be higher than this. So moving on to the next segment, Tesla Energy. Tesla stores the energy absorbed by its solar panels using its batteries. And this has been working pretty well for Tesla as they have managed to grow 40% year on year. You may say, hey, will this trend continue? And in short, I think yes. Here's why. The cost of solar panels have reduced dramatically over the years and will continue to become cheaper. Solar panels will also become more efficient, and with government incentives in place, I think it will only make sense that solar will be more and more widely adopted around the world by residential and corporate sectors. So with a 40% compounded increase until 2025, in 2025, Tesla will gain around $10.7 billion in annual revenue. Right, so moving on to the last segment, full self-driving. For this segment, I'll just take the safe bet, right? 11% of Tesla vehicles, 11% of Tesla car buyers will subscribe to full self-driving, which is, by the way, the lowest percentage it has ever been. And I think that as this software becomes more and more sophisticated in 2025, it's more likely that the subscription numbers will go above rather than below 11%. Don't you think so? And so that will be over 450,000 vehicles subscribed to full self-driving. And customers can choose either a $200 a month package or a one-time fee of $10,000. But again, to keep things simple, we just assume the conservative amount of $200, right? And that would be $200 a month. And that would be like 2.4K a year. Tesla will make slightly over $1 billion from full self-driving, right? And so we add the revenue of these 3 sectors together and we get a grand total of about $195 billion. And that's like excluding Tesla insurance and Tesla charging stations, so on and so forth, right? And here we can see Puppy Elon laughing all the way to the bank. But what does this mean for the Tesla stock price? Okay, before I proceed on with that, I would first like to point out Tesla's stock price at the moment, which is about $941, while its market cap corresponded to $966 billion. So if the stock price then rises to $3,000, this would mean that Tesla would be worth close to $3 trillion, right? And so earlier on, I mentioned that we will be using the PS ratio to determine Tesla's market cap. We can also use the EBITDA ratio or the price to earnings ratio as something complementary, but again, there's no way of predicting the exact value of a company. However, we can make estimations, and so this is how I would do it briefly using the PS ratio. And for me, because Tesla is already profitable and will remain profitable, and is also a fast-growing company, a fast-growing technological company, I personally think that a PS ratio of 12 to 16 over here is justified. And if you look at other technological companies, right, Shopify is at 50, Nvidia's around 20s. But if you compare to the blue chip tech sector, they are all valued much lower. And that is because their growth is projected to be slower. Besides the predicted PS ratio range and the number of vehicles delivered in 2025, which might be little on the higher side, I'll say that the entire calculation was actually pretty conservative. Given that its 2025 revenue would be 195 billion, a PS ratio of 15 to 16 would actually allow the stock price to hit $3,000. I would still say that it is less likely to happen because earnings report for 2025 quarter 4 will only be released in 2026. So we will probably include 2024's quarter 4's revenue in the calculation instead of 2025 quarter 4's, right? And since 2024 quarter 4's results are likely to be lower than 2025, the revenue calculated will be lower than projected, and perhaps to reach a $3,000 stock price, Tesla's stock might have to be slightly overvalued, right? However, since the stock market generally does well at the end of the year, such valuations are again not out of the question. Again, I'd like to reiterate that these calculations are fairly conservative, and also vehicle sales this year is looking to outperform expectations, and so we might potentially see a slowdown in Tesla vehicle sales in 2022, which is next year. So what do you guys think? Do you think it's possible? If you have any questions or videos that you would like to see next, do leave a comment in the comment section below. If you enjoyed the video or took away something from it, would appreciate if you click the like button below, and if you'd like to see more informative content like this, do hit the bell icon and the subscribe button. Well, that's all. Stay invested, and I'll see you next time.